Well, finally, we have a breakout in the equity markets to the upside. But there's one thing you got to wait on first. Welcome to the 12-Minute Trading Market Minute for Sunday, the 5th of February. Here is a daily chart of the S&P 500 futures, and this does appear to be a legitimate upside breakout, not only above this descending trend line, but we have a change in polarity now to higher highs and higher lows. You can see this if we move out to the weekly chart here. We have put in a significant higher low, and we have what might be a higher high. Now, the only problem that I have with this right now is that on the S&P 500 futures, we have stalled out just about 4,200. So this is the same high on a closing basis that we had back in the middle of December on that big CPI print that we had. Okay, so we've been able to rally back up here, but it's been unable to close above that level that was posted back in December. Now, the reason I don't want to get too overconfident here in the bull case is because of something that happened back here over 21 years ago. And this is the bear market that we had from 2000 to 2003. And here's the 01 lows, and here's the bounce that we had up from there. Nice bounce, higher low in the weekly chart, bounce back up to this level, and then double topped and died into the final lows where it triple bottomed and eventually did release to the upside. So we could be at the same place here. I don't hear anybody talking about the 2002 equivalent. So I want to be positive, but I do want to bring up the possibility that we could have a double top, something like this happening with the final capitulation yet to wait. So let's pull this out to the cash index and the full fractals with the monthly, weekly, and daily charts. And this is what I want you to wait for, because I think this will happen. We do have daily exhaustion on the lower right-hand corner. So this is a very linear move that we've seen over the past week or so. Very, very strong move from 3,900 up to 4,200. 300 points in just a few days takes a toll on a market. So range expansion like this typically leads to some form of range contraction. Now, I don't know if that's going to stay in a tight little range between 4,100, 4,200. If so, that would be super bullish. The second thing that we could see would be an outright pullback straight down to here on some piece of bad news. And as long as that stays above the 38.2% retracement, I think that's still okay, because this is a faster way of recharging the charts. And we saw this happen in mid-January, the same exact thing. Now, at the same time, what's going to be happening here over the next 2 weeks is we're going to see the weekly chart also fall into exhaustion, because we're going to have these two candles drop off the backside. We're going to be left with one monster rally, this 400-point rally off of these lows from December. And this is also going to put fractal exhaustion into play. So we're going to have a larger time frame showing exhaustion. So we may see more of a pullback, more of a consolidation, more of just choppy price action over the course of the next few weeks. Now, the net result of this will be to bum everybody out. Everybody will say, well, that's it. We're just going to double top and there's no chance for the bull case. Well, that's what it's supposed to do. And so what you have to do is you have to wait out this next consolidation period. And after that, if we start to break through 4,200, nobody will believe it, but you'll be ready for it. So look for some consolidation or corrective price action to occur in the near future, just because we're looking at two exhausted charts. Range expansion goes to range contraction every single time. That's it for today's Market Minute. Thanks for listening. We'll see you in the next one.